So today we are going to talk about Exide Industries, and at Religare Broking we are quite bullish on the stock. But if you see the stock prices, you would think that why we are bullish, where this stock has underperformed significantly in last 2-3 years. In fact, not just stock, but the entire battery pack. Though you don't have much of numbers over there, but all stocks have underperformed. So why we are painting a bullish picture now? Uh, to an extent, this is a cyclical space. So before getting into how a stock can be a good investment, I just want to dwell into some basics of Exide Industry. So we all know that it's a battery manufacturing company, not just for four-wheelers but also for two-wheelers, three-wheelers. Also, it has good revenue, 35% of revenue coming from industrial batteries and not just vehicle batteries. Uh, this is the basic of company. The other important part which you need to understand about Exide is that the raw material lead constitute around 60 to 70% of the total revenue cost. So which indicates that it is very dependent on the prices of lead. Now these two are the basic aspects. Why stock has underperformed, I want to dwell first into that. Firstly, 2018 stock was quoting, August 2018 stock was quoting somewhere around 300, and as we speak it is around 150, 50% fall in stock price. There were a few challenges. We all know that back end of 2018, 2019 there was slowdown in economy, and there was some correction which was taking place. Spending was reducing, and stock had started correcting, and then came COVID issue. Everything corrected, and so did Exide. But you didn't see a meaningful bounce back in Exide industry, or as a matter of fact battery stocks. Reason being that 2019 2020 onwards the EV story took up steam, and though these battery manufacturers are predominantly lead acidic battery manufacturers, the EV story was all about lithium ion batteries. So a lot of dark clouds were surrounded when it came to the future prospects of these companies, and that's the reason, unlike market, unlike growth stocks, you didn't see these stocks bouncing back. Now the other important factor is the commodity. Now late 2021 or probably mid 2021 we saw commodity prices going up, and then first by demand and later by the geopolitical issue, commodity prices soared up. So lead as a percentage of total cost or total cost has been around 60 to 70% for Exide. And quarterly numbers were today. This last quarter gone by, the cost was 72% was the lead cost of total cost, which was at all-time high. So these factors were negative. Now that's the reason a stock which used to command a premium, or say a PE of 23 plus, is now trading at 13p. So what is changing for us to become bullish now? Firstly, let me give you some numbers over here. Out of 30 lakhs four-wheelers passenger vehicles sold in FY22, 0.6% of that was EV. If you look at two-wheeler space, out of 1.3 crore two-wheelers sold, hardly around 2 lakhs were EV, which means around 1.5%. So you still have more than 99% passenger vehicle which are in conventional form, and you have more than 98% of two-wheelers which are still run by petrol, which indicates that there is still a lot of OEM demand. And more than that, at least in PV we have seen that there is a lot of replacement demand, which ensures that the business continues for these companies. So we are seeing a decent growth. In fact, the year-on-year growth of this quarter for Exide was around 16%. But margins have fallen. Margins have fallen from the peak of 14% to 10%. And you will generally see there is a pattern to margins. There is pattern to the lead cost. So as lead cost moves higher, you see margins correcting. And hence margin of 10%, we haven't seen Exide margins going below 10% unless and until there are some extraordinary circumstances. Now we are expecting a reversal happening in all the sense. In the sense, firstly, We are now seeing central bankers, our bank, increasing interest rates, which is going to impact demand at least for some time, which would lead to correction in commodity prices, which is the basic constituent for Exide. Now, if commodity prices correct and if the growth continues, the replacement growth, if not the new OEM growth, and also the industrial growth is quite picking up. RBI governor clearly stated that how economy is in sound shape and how capex cycle is picking up. So we are seeing a decent growth in the industrial space also in Exide. So we are expecting margins to now improve from 10% to move higher. At the same time, growth to continue. And we are expecting, re-rating and de-rating is part of industry which is cyclical in nature. So when commodity prices goes up, there is de-rating. When commodity prices come down, there is re-rating. So we have seen a stock like Exide, which used to trade at say 20 plus P, is now trading at sub 13 P. And in last 10 years, we have seen 4 to 5 times Exide coming at 13p, and from there it has gone towards 23p or so. If you look at current EPS, which is around 12 to 13 rupees, even if we give a very mild re-rating PE of 15, we are seeing a valuation towards 195, 200 rupees. And if you add 35 rupees of value, its value of HDFC Life, where it holds a 4.1% after giving 40% holding discount. If you add that 35 rupees, then your target, medium-term target for the stock is around 225 to 30 rupees. This growth prospects from medium-term perspective is looking fine. But what about very long-term perspective? Exide sold its entire insurance business to HDFC Life, and now it has been a debt-free company. It will become a cash-rich company, and it is planning to commission a plant, battery plant, lithium-ion battery plant, to cater future needs. So I think market has been very brutal to battery companies. Exide, being a market leader, will opt for that company going forward as well. So these are good levels to get into stock, both from valuation perspective as well as from a futuristic growth visibility perspective. And it's a contra call. And if you're an investor, you have to buy a stock which corrects. And a cyclical stock means we all feel left out when commodity stocks have multiplied 2 times, 3 times from lower levels. Battery stocks are quasi-commodity stocks, and they are inversely proportional to commodity cycle. So we have this strong buy on Exide around current levels of 145, 150. We have a target price of around 225, 230 on conservative basis, which is almost 50% from current levels. So that's our investment idea, Exide Industry Buy.